Staying on the markets, our next guest says corporate America sees the writing on the wall and may be planning for another recession. Let's bring in Jeffrey Small, Arbor Financial President. Jeffrey, you're saying that the corporate America sees the writing on the wall, preparing for a recession. Make your case here.
Well, there's no doubt about that, Stuart, and thanks for having me today. But with the threat of deflation, there's no doubt that's going to affect top line and bottom line revenue and earnings growth. Hence, there's a number of companies that have announced major layoffs. Caterpillar just announced a 10,000 person layoff this week. Verizon just announced they're going to cut employee expenses by $2.5 billion. And we really have not very great unemployment rates. The true unemployment rate is around 10%, greater than 10% on the U6. We have very low labor force participation.
Now, you're a money manager, you're a money advisory kind of guy. You organize money. Bearing in mind your outlook that maybe corporations are preparing for a recession, are you investing differently? Are you saying take some money out of stocks at this point?
Well, there's no doubt we're investing differently, and we're really advocates for the average investor. And the stock market and the Fed has been very humbling experience so far for that average investor. And so what we really want to do, Stuart, is really shift out of risk and focus on yields. I'm afraid that we're entering the advent of a non-performing stock market.
Which means get into stocks like dividend plays or get into bonds. What are you advising people?
Well, I think we focus on yields in the preferred stock arena, in the investment grade arena, in REITs, but we look for things that are stable, that are not going to be in this state of fluctuation with the market volatility that we have. Because when the market's volatile, all we really have is the traders, the institutions making money. It doesn't help the average investor. You know,
on this program, over the last couple of months, I have not had a single analyst who says, buy this market. Stocks are cheap. We're going to 20,000 on the Dow Industrials. Not a single analyst has said anything like that. And you're not saying it now, are you?
Well, I'm not saying it, Stuart, because, you know, half the stocks in the market are down by 20% or greater. Half the market is in a bear market right now, and the macro data really indicates that there's a greater drop to come. And if the drop doesn't occur, this would be the first time in the history of the market that we didn't have 3 drops in a long-term secular pattern. And so I don't think that's going to happen with the stage that's set currently.
Very interesting, Jeffrey. You gave us clarity. We're like that. Jeffrey Small, everyone. Thanks very much for being with us. You can come again soon. Thank you.
Thank you, Stuart.